Welcome everyone to ChartsFocusOne's CFO Swinger Watch newsletter, where we teach you how to work hard and trade smart. All right, so we have a lot to uncover this week, so let's go ahead and start off with the markets. So SPY had an incredible sell-off last week, but you guys already know last week we had a very volatile trading days as uh, the back-to-back trading days had multiple gap ups and gap downs. And eventually on Friday, we got our direction as we decided to sell off and not hold any of our intraday support levels or even daily support levels like 422.50 or 418.50. So where do we go from here? If you guys take a look in March or in early March and late February, we had a very good bottoming action here, right? And I was looking at our previous lows in mid-March, which were on these two candlesticks. All right, if you take a look at the left one here, this low is around 413.83, while this candlestick's low is around 414.50. So this was kind of the range that I was looking for the price to hold last week. But obviously we closed way below that. We closed exactly at 412. Now, the next area that we need to see and hopefully see a nice bounce is around 409.37. If we do not hold this level right here or this low, we are flushing all the way back down to 400, which will be the determining factor of whether or not we will see continuous movement to the downside. Because if you take a look in the past year and back in 2021, we have a gap that we have never filled. Okay, so I'm looking for kind of a 390 to 400 range if we break below 400. So a nice 10-point move from 400. And if we decide to fill in the gap here, we can come back down to 390 as well. Okay, so that's the reason why I'm looking for a nice 10-point range between 400 to 390. Now, if you take a look at the weekly time frame for SPY, the entire month of April was red. Okay. Now, when we have back-to-back consecutive red candlesticks like this, or generally if you have back-to-back consecutive same colored candlesticks, especially when we have three or more back-to-back consecutive same colored candlesticks, you need the fourth, okay, candlestick to be at least the opposite color. But when we have the fourth candlestick after the third one be the exact same color as the previous three candlesticks, that usually means that the current trend that you're looking at is very unhealthy. So this week, I am expecting a green week. If we take a look at the previous weeks, okay, so right here when we actually broke below this ascending support trend line here, which was a part of the broader and bigger ascending channel chart pattern, we were actually in a very healthy downtrend. Because if you take a look at this area right here, where we came from around 459-ish to around 418 to 410, this was a very good downtrend, even though it was very volatile. We can just tell because we have all these wicks right at the top and the bottom. But even with this volatility, weekly wise, it was a very healthy downtrend because we had, intermittent bounces between each week where we kept on going lower. But this time we see an increased amount of selling. Now, I'm not saying this is bad for sellers. I'm just saying that when we have a trend like this, where we just go straight down, back-to-back consecutive candlesticks like this that are on the same color, you need to at least expect a healthy bounce this week. So this week, I'm expecting a nice bounce back to 418.50, possibly to 422.50, but minimum, I want us to see at least a bounce to 418.50 to retest this level and then go back down. Okay, so who knows? We may even just flush down to 400 first and then actually bounce at this huge major psychological level, or we actually have one of those days where we have a euphoric sell-off in the morning and then we continue to go up for the rest of the week, right? We would have a candlestick like this, right? We have a nice hammer candlestick like this. Okay, so I won't need to fill in that candlestick right there. But I apologize about the crude drawing, but I hope you get my picture. So with SPY, that's basically what you need to know for this week. Just watch out for any other volatility or any type of headlines that we can get that can potentially, bring the price up and back down very quickly. Next, we have QQQ, which is basically in the same spot. But QQQ is in a worse shape here because we lost a critical level of support of $318, which was the area and the price range where we were looking at back in February, late February and mid-March, which was the same low that we were looking at in SPY. However, we actually blew past the lows that were made back in late February and mid-March. So it is in a very much of a worse shape than SPY. And if you take a look at the weekly time frame, okay, we are now adhering to finally this head and shoulder chart pattern that we've been looking at for months. And the kind of the trigger that made this chart pattern fall through and the price to actually fall through with the chart is that we had an actual double top pattern here on the right shoulder. So this was kind of the final kicker for the price to start following this macro head and shoulders chart pattern. So we did break below 318, and we also broke below this descending level of support, which coincided with the 318 horizontal level of support, which brought even more selling. And how do we know that we saw a lot more selling coming in? Well, just take a look at the stair stepping up volume bars here, right? We started off 2 weeks ago, or I would say 3 weeks ago now, with a fairly low volume. And then we saw that volume increasing and increasing even more last week as we saw more sellers coming in and buyers selling out of their long positions as well. So the next immediate level of support that we need to be watching out for is 309, just like on SPY, which is 400. So for this level, if you want to hold this level, we need to bounce off this level quickly this week and then have a nice run up for a nice weekly green candlestick, because like I said, okay, this is unhealthy. All right, this is very unhealthy. So, if you want me to go over the summary of the kind of the theory or concept of the unhealthy trend, please ask me, especially in the Discord, if you guys don't understand this theory at all or concept. But we do have a huge demand area right here that starts from 300, which is the psychological level here, to around, I would say, 290. So let me kind of extend this here. Okay, so it's another 10-point range move here. If we do break below 300, just like SPY, right? For SPY, it was 400 to 390, while in the Qs, we have 300 to 290, right? So, we have to watch out for these significant price levels if you are wanting to correctly hedge at the right times. Okay, well, when I say times, I mean the exact price levels. Okay, and excuse me, sorry about my dog there. Okay, so the first name is ASAN or Asana. And we've watched this name absolutely explode back in mid-January and mid-February here as it broke out of that nice descending or falling wedge. And I'm kind of wanting to see the same action here, but obviously we have a lot of selling pressure coming in from the tech market, so the Qs. And so Asana was initially showing some good strength on Friday, but it obviously succumb to that selling pressure from the Qs. So if we were to see a nice breakout, a confirmed breakout, we need to see a nice retest of 29.80-ish and then eventually a break and hold above $30. And in order to see an even more confirmation that we can reverse here from this point forward is that we need to break above 34 here and hold 34 as well. Okay, so that would be the decisive move for this name if it wants to reverse higher, right? So we need to hold and break above 35 here. Now, obviously, the reason why I'm a bit bullish on this name is that we've already came back down a lot. Okay, so this name was at triple digits here, right? It was nearly at 150 at one point. And for this name to come back down all the way like this, back to its previous major level of resistance and support, right? Resistance here and support here, just tells me that there could be a possibility that this name is ready to bounce because of the fact that it has fallen back down to its previous IPO levels, right? And obviously, if the IPO levels do not hold, okay, if they do not hold, this can go lower, right? I mean, as simple as that, right? So if it decides to break around $21, right? So if you don't even hold this level, which is around $26 here, there's a good chance that we come back down to that $21 level and then break below. Okay, so the next name that I have for you all is PSX. So PSX is a very, very good name here to look at for the rest of the I would say the rest of the month here of May because of how strong it's looking so far. And if you take a look at the weekly time frame, I've already mentioned this a few times here. We have a nice ascending triangle chart pattern, which is a bullish chart pattern because we make higher lows and at the same time we can possibly make higher highs if we decide to break above the ascending triangle resistance. Now, if we go back to the daily time frame, we have a major level of resistance that we've been rejecting off of for the past 2 weeks, which is around 90.20. And if we're able to clear this level, we can easily take out the other levels of resistances, which is around 91.50 and around 93 to $94. So in order for us to really, really see some follow through on this name as a relative strength stock in RSS, we need to be able to see a break of these levels and hold above these levels and obviously move inversely to the overall markets. Now, if it decides to sell off again with the markets, as you saw on Friday, I'm looking for a nice bounce around 85 to around 86.50. And if we don't hold those levels, there's a good chance that we can actually come back down and retest 82.20. And if that support doesn't hold, we can retest this ascending support trend line, which will give off warning signs that this name is starting to act not like an RSS, but as a name that will start falling with the rest of the market because we've already touched this ascending support trend line multiple times here, at least 4 to 5 times here. So if we come back down again, that's just telling me that sellers are more likely in control. And that's the reason why the price continues to come back down to significant levels of support. Okay, so that's it for PSX. Let's take a look at HPQ. So HPQ, just like PSX, is a great, great RSS, a relative strength stock name that I've been looking at for the past few weeks. So PSX and HPQ, I want you guys to have them on your charts because these names are holding really, really well. Okay, and it's showing less volatility compared to the markets because, well, who would ever want to trade in volatile times? So these names can provide an individual, less volatile price action that can give you some great returns while the overall markets are being crazy. All right. So with HPQ here, we're still staying near all-time high levels, right? And we want to stay in these all-time high levels because if we decide to come back down and not stay near these all-time high levels, then this name will also succumb to the market volatility, and the overall market downtrend that we're seeing so far. So as I mentioned a few weeks back, we're seeing a nice cup and handle chart pattern, which is kind of common here, especially at all-time high prices when the prices basically stop going higher, right? As it already made a new all-time high, and it kind of starts to consolidate. And whenever the price consolidates at an all-time high level, okay, that usually means that buyers are still very much interested in this name rather than sellers. So the price continues to stay up here and it holds very strongly to all the support levels, there's a good chance that we can see another leg up higher and back into the 40s. So on a daily time frame, right, we're seeing a nice wedge chart pattern forming here as well, a very nice micro chart pattern within the macro cup and handle chart pattern that we're seeing, right? So obviously this wedge or symmetrical triangle chart pattern is a micro chart pattern that's infused within the macro cup and handle chart pattern, right? So we have a cup here, and then we have our handle right here, right? So back in the daily time frame, we can come back down, right? Below, well, if we do break below 36 and eventually 35, which is what I actually want to see, because if you come back down and break below 36.50 and 35, there's a good chance we can actually retest 33.50ish to around $33, which would actually give us more of a chance to actually fill in the gap that we made here and then have a better chance of a bounce near these all-time high levels and actually start trending back up and possibly come back towards the all-time high levels and break into new all-time high levels, right? So even if we decide to break below major levels of support this week, like 35 or even 33.50-ish, and we decide to fill in this gap right here, on a broader time frame in the bigger picture, that really wouldn't matter, right? Because we're still near all-time high prices, right? Which is why we need to be looking at this name, because even during a downtrend, this name is still going to provide a lot of relative strength and less volatility compared to the markets. All right, so that is it for this week. I do not have any cryptocurrency recommendations for you all this week because I want you all to be focused on the overall markets and our individual names that we have in the newsletter. So make sure you guys take a look at the technical setups as well, because we have about 10 names that I want you guys to look at, and obviously choose which ones are best for you to trade account size wise and risk management wise as well. And obviously the ones that you guys are most familiar with as well. All right, I'll see you guys all in the Discord, and good luck trading this week. Remember to set up your alerts.